Did you know that 92% of traders lose money because they don't have a systematic method? I'm Oliver Velez. I've been trading the markets for over 38 years. And if there's one thing I've learned, is that trading is not about luck. It's about clear rules, discipline, and a structured approach. And that's exactly what I'm going to share with you in my live event on March 1st. During this session, I'll teach you the fundamentals of trading, how to identify opportunities in the market, and how to structure your trades to improve your decision-making process. Thousands of traders have already signed up, and despite the fact that this is an online event, spots are limited. Don't miss this opportunity. Register for free right now, and I'll see you there.
Are you ready for what the trifecta is? Are you ready for this? I don't even think you're ready. It's three of them. It's three. Oh, it's not one surge off the 200. No. It's not one, which is powerful enough, up to 92% accuracy rate. Oh, no. The trifecta is not two surges off the 200. Oh, no. Trifecta insinuates three. It's three freaking surges off the 200 simultaneously. A surge off the 200 on the 2-minute time frame. At the same time, it's a surge off the 200 on the 5-minute time frame. At the same time, it's a surge off the 200 on the 15-minute time frame. That is the creme de la creme. That is the trifecta. That's the closest thing you're going to get to guaranteed money in this game. The trifecta. Beautiful, beautiful, beautiful thing. All right, let's get back. Let me show you this. Smoke on this. This is crazy, guys. This is crazy. Okay? Now, this is not a session to go over structuring your platform, but if you want a head start on that, because I do plan on having a session like that, if you want a head start on that, you can start off right here by just mimicking mine. All right? Notice I don't have a whole lot of fancy indicators on the chart. Don't need them. I got each one of my charts has two moving averages. The 20-period moving average, take a look. 20-period moving average, 200-period moving average. So the red is the 200, the red is the 200, the red is the 200 on all time frames. The red is the 200, simple moving averages. The blue is the 20, all right? Blue is the 20, 20, simple. Blue is the 20, simple. Blue is the 20, simple. These are the only indicators I have on my chart. Now that we have that, I want to take you into the concept, a concept that that my traders and I call the trifecta setup. The trifecta, write that down. The trifecta. The trifecta. I even like the way that sounds. Trifecta, say it. Trifecta. I'm not even going to go on until I see somebody type it. Trifecta. Somebody type it for me. I just want to see the word. Type it. Trifecta. If you have been following my work for even a little bit of time, you understand that, which I just explained, I rely on two moving averages on every single chart, irrespective of the time frame. That is the 20-period moving average. I'm going to mark this, which is the blue, the 20-period moving average, and the 200-period moving average. Of these two moving averages, this is by far the most powerful of the two. The 200-period moving average is the most powerful when it is relatively flat. The 20 is more powerful when it is trending, up or down. So your 20 is more powerful in this state, and your 200 is more powerful in this state, flattish. It doesn't have to be perfectly flat. Like I consider that a flat 200. You see that? It's a little curvy, but it's flat enough. Let's not start bringing out geometric tools. But Oliver, I use my ruler and there's a little curve to it. Let's not be ridiculous. Flattish, okay? Flattish. As long as it doesn't look like a freaking 45-degree angle, it's flat. It can be a little bit angly, but not a lot. So my general guideline is if your 200 doesn't look like a freaking 20, then it's flat enough. But if it looks like a 20, because 20s are typically slanty, if it doesn't look like a 20, then it's flat enough. Let's not be ridiculous. Now, we've got a flattish 200, and that's when the 200 is the most powerful, when it is flat-ish. The trifecta is based largely off of this powerful, flat-ish 200 period moving average. So let me explain something to you. When you have a 200 period moving average and you have a move down from the 200, it doesn't have to be touching it. It just has to be near it. So all of these count. This one started here, right from the 200. This is the 200. This one started here. Boom. Same thing. This one started here. Boom. Same thing. Do you understand? So it's almost like it's in the area of the 200. It doesn't have to be touching the 200. Let's not be freaking ridiculous again. Oh, but Oliver, it's four or 5 centimeters away from the 200. No, that's not what we're talking about. If it's anywhere in a small stone's throw away from the 200, that's near the 200, that's close enough. But Oliver, it's a few centimeters off. No, we don't trade that way. You can't force the market into very precise things like that. It doesn't work. So anywhere near the 200 is fine. Now, if you drop from anywhere near, notice whether it starts a little bit above, a little bit below, or right on it, the odds are you're gonna be. That powerful 200 is gonna send this. Because not only is the 200 powerful, it is the most powerful. And not only is it the most powerful, it is the most powerful when it is flat-ish. Now, you can get the same thing like this, guys. Here is starting here, boom. Here is starting here, boom. You can get the move up. Here is starting right on it, boom. All good enough. Whether you start a little bit below it, a little bit above it, or just on it, these surges off of a flat-ish moving average to 200 moving average to the upside are just as powerful as the ones that surge downward from a flat 200. Now that you know the 200 is the granddaddy of all moving averages, now that you know that even though the 200 is the most powerful moving average in existence, it is even more powerful than that when it is flat-ish. You now know that surges up or down from that flat-ish moving average are likely to soar. All right, I'm not going to babysit you long. These are things you should be writing down. I'm not going to repeat them like 100 times. I'll just repeat them like 20 times. But you're going to surge more often than not if that surge originates from the flat-ish 200 period moving average. Whether it starts a little bit below or above or right on, doesn't matter. Let's take Google. Now, for those of you who want to look this up yourself, you can go to Google on August 28th. This is August 28th, where we had on a 2-minute chart for Google, G-O-O-G, you had on a 2-minute chart, you had a drop that originated from here. But Oliver, it's a few centimeters under the 200. No, that's good enough. Because remember, the 200 is really more like a zone. It's not a skinny line. Your platform's lying to you. Moving averages aren't skinny lines. They are zones like this. So that is close enough. It is in the zone of the 200. And you drop. Now, let me give you some statistics. Surges that downward from an overhead. Guys, listen to me carefully. Surges downward from an overhead flattish 200. Boom, boom, from an overhead flattish 200. The odds of follow through can be as high, let's put it this way, can be as high as, are you kidding me? No, I'm not. 92%. It's not always, There are different versions of this, which I'm not going to cover that today. There are different versions, but they're all high. So it ranges between 88% and 92%. Still high. But there's a version that is 92%, and there's a version that's closer to 80%, 88%. But just think of that range, 88 to 92% accuracy rate, consistency rate on follow through. And look at what it freaking did. That is insane. Are you ready for what the trifecta is? Are you ready for this? I don't even think you're ready. It's 3 of them. It's 3. Oh, it's not one surge off the 200. No. It's not one, which is powerful enough, up to 92% accuracy rate. Oh, no. The trifecta is not 2 surges off the 200. Oh, no. Trifecta insinuates 3. It's 3 freaking surges off the 200 simultaneously. A surge off the 200 on the 2-minute time frame. At the same time, it's a surge off the 200 on the 5-minute time frame. At the same time, it's a surge off the 200 on the 15-minute time frame. That is the creme de la creme. That is the trifecta. That's the closest thing you're going to get to guaranteed money in this game. The trifecta. Beautiful, beautiful, beautiful thing. All right, let's get back. Let me show you this. Smoke on this. This is crazy, guys. This is crazy. You've got this drop. Now, remember, guys, I like to count the drops from the start. So I want you to take a look at this 2-minute chart very carefully here. The first bar of the first 2-minute bar on the 28th is green. It starts off going green, and at one point, it looks like a sharp, solid green bar right under the flat-ish 200, which we ignore. But if you notice carefully, the green starts to fall back. So the green starts to fall back and back and back and back. Do you understand? I want you to understand that if green is falling back, red is taking over, because green is the color up and red is the color down, right? Well, that tail, if you had to paint it a color, is red because it's moving down. It continues to move down in the next bar. So what I like to look at here is I like to look at one fluid drop from the peak. And there's my surge. I come from way over here, guys. Look, this is OV. Ready? Ready? I am ready. Boom! I am inside of that surge. Protection, I need to get my protection. My stop loss above that 200. You got to be able to deal with that. You got to get that stop loss above the 200. The 200 is the ceiling. You got to be above the ceiling. And I've got up to a 92% chance of follow through. And listen to that sound. That's our favorite sound. Now that's off the 2-minute. I want you to focus on this part of the play. That's your identifying the surge downward off the flat 200. That's the 2-minute chart. Look at the 5-minute at the same time. On a bigger time frame, look at your surge downward off the 200 on the 5-minute on the 28th. You're getting the same picture on a completely different time frame. Surging down off of a flat 200 on the 2, surging downward off of a flat 200 on the 5. Are you kidding me? Here I go again. Boom! Get that stop loss above that 200. The rest is history. But we're not done yet. That's the bifecta. See, the bifecta is the surge off the 2 and the 200 on the 2, the 200 on the 5. But we've got the trifecta, which is also the surge off the 200 on the 15-minute time frame. Oh my goodness. Surge. Boom! So where they all start, look at where they start. Right under the 200 on the 15. Let's go back again. right under the 200 on the 15, right under the 200 on the 5. There's your 5. Right under the 200 on your 2. Ding, 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 ding. The trifecta. It's a freaking beautiful thing. It's a beautiful thing. I need to know if you understand what the trifecta is, because this is your assignment. 2, 5, and 15. You got it. That's the trifecta. Surge off of the 200, and it originates from a flattish 200 on each one of those time frames simultaneously. So that now go out into the real world, people. I want you practicing identifying trifectas. Make sure now, so in order to do that, people, look at this. You're going to have to make sure that you have some type of setup here, right? Where you've got all 3 of these time frames close together. Whether you put them side by side like this. So here I've got the 2 minute, here I've got the 5 minute next to it, and here I've got the 15 minute next to it. Now, because I have the daily on this, I stack them, as you saw, 2 and 5 above, 15 and daily below. You don't really need the daily for income producing trading. You can leave the daily off and put them side by side like this. If that helps you see them simultaneously, that wow, we're falling from the 200 on the 2 minute. We're falling from the, let me do this even fatter. We're falling from the 200 on the 2 minute. We're falling from the 200 on the 5 minute, and we're falling from the 200 on the 15 minute. I've got Oliver Velez's trifecta here. So if having them side by side like this helps you see it better, then by all means, structure your screen that way. And this is very powerful, guys. Now, I've only shown you one. I want to keep it simple. This is not a master class or anything like that. Now, it is up to you, people, to move this. Let me explain to you before I leave you what I mean by move this. What I mean by move this, it is up to you to move this from the intellect into the heart. The heart is the center of understanding. It's symbolic for the center of understanding, the center of your being, right? Information here does not translate into experience. You can't keep it here. You now intellectually understand this trifecta concept. That does not mean that it can produce for you. Information can't produce for you. It's the start, but it can't produce. You need experience added to the information to make it yours. It is still mine in your mind. It becomes yours through experience. It's very important to understand this. Gaining experience with this. Look for surges. You might not be able to see the trifecta, but look for surges off of the 200 on any time frame. And just identify, wow, that was a surge off of a flat 200 on the 2 minute. Wow, this was a surge off of a flat 200 on the 5 minute. Individually is fine. Every now and then you're going to see the trifecta. That's great. But you don't, to make this concept yours, you don't need to find the trifecta. You need to find surges off the 200, even if it's just one. This is building your opportunity spotting skills for surges off of a relatively flat 200. Wow, Apple had a surge off of its flat 5 200 period moving average. Oh, wow, Oracle had a surge off of its 2 minute flat 200. Oh, wow, this stock had a surge off of the daily time frame. This stock had a surge off of the 15 minute. Even identifying the surges off of relatively flat 200s on any time frame individually will automatically build your trifecta spotting, opportunity spotting skills. Because the trifecta is just simply made of 3 surges. So if you practice even identifying 1 at a time, sometimes you'll see 2 at a time. Every now and then you'll see the trifecta come, which is really, truly special. Make this your theme, and I promise you, if you do this every single week and make the next week the theme that we cover here today, in a couple of months, you're going to be head and shoulders above everyone else.